السلام عليكم. نرحب فيكم لهذه الجلسة النقاشية لعرض البيانات المالية لشركة صلالة خدمات المواني للنصف الأول من عام 2023. طبعا الحين بحول إنجليزي، وإذا واحد عنده أي أسئلة بالإمكان أنه نترجم بالإنجليزي باللغة العربية. السلام عليكم and welcome to this discussion session on our first half financial result for Salalah Port Services. I am Mohammed Al-Mashin, the Chief Corporate Affairs Officer and also the Investment Relation Officer. I have with me Bart, our CFO, and also Iman Al-Shahri, our Legal Counselor, and also Iman Jabub, our Corporate Communication Manager. The agenda is I will take you through like a brief about about Port of Salalah, and then Bart will take you through the financial results. So I'll just share my my presentation. Just a minute. Not this one, not this one. Okay. You can see it, right?
Yes.
You can see in the screen?
Yes.
Yes,
Okay,
yes, Muhammad.
Just a minute.
Yeah.
Okay. So starting with a brief about Port of Salalah. We started our operations in 1998. We are, as you know, a public listed company traded in Muscat security market, and we are the largest employer in Dhofar with more than 2,600 employees. We have a 30 years concession agreement that will end by 2028, and we are now in a negotiation with the government for the extension. And we are mainly considered as we have two terminals. One is the general cargo terminal, and one is the container terminal, and I will later on get into details on that. If we look into our shareholder profile, our biggest shareholder is ABM Terminals, which owns 30%. ABM Terminals is part of Maersk Group, and they are now currently managing more than 74 ports around the world, and they are then their presence in more than 40 countries around the world. The second one is the government pension funds, and now is under SPF, Social Protection Fund. And also ASEA, they have 20%, 19% is institutional investors, and 8% is a local investors. If we look into our growth, this is the general cargo terminal. When we started with almost less than 1 million, and then our growth continues. Last year we handled 18.4, and we are expecting this year to achieve around 20 million. The first half of this year we already handled 11.2, and that is a very good promising that we will inshallah will hit our target. If we look into our container terminal, we started with less than 1 million, and last year we handled 4.5, and that is almost the maximum of our current capacity. And the first half of this year we handled 2 million, and we are expecting this year to be less than last year by around 15% due to our expansion. We are now currently doing an expansion in our container terminal to add another 1.5 million TEUs. With the total, after we finish in the Q1 2025, we are expecting our capacity to increase to 6.5 million TEUs, inshallah. This is like an overview of our port. As I mentioned, we have a container terminal in the north side, and the general cargo terminal in the south side. And this is like where actually we are managing our commodities. Our services, we are a multi-purpose port, so we handled a lot of services, starting from stevedoring to bunkering, real estate, cruise vessels. This year we handled currently more than 14 cruise vessels, and we are expecting that numbers to grow, especially after COVID-19. This is some of our key recognition. We are number 45 in the top 100 containers in the world. We are number 1 in exporting gypsum. And we are number 2 as the most efficient terminal out of almost 374 ports globally. And this is for the second year consecutive. Now I will hand over to Bart to take us through the financial. Bart, to you.
Thank you, Mohammed. So I think in the first half of the year, we had a very strong performance, definitely considering the current upgrade, which is going on. So strong performance in terms of profit, in terms of continuing our strong balance sheet, and in terms of margins, where we managed to increase all our margins. So if we start by looking at our revenue, there we saw a 2% increase, and this was driven by our general cargo. 25% growth we saw there, and this is gypsum and limestone. So very good performance there. On our container side, we saw a -8% growth rate. This was due to our current upgrade. So we had to take out some capacity because we're working on the quay, strengthening the quays and working on the yard. These volumes, the customer brought these volumes to other ports temporarily, and they will bring it back once we're ready. So that's not an issue, the negative growth on the container side. If we then look at our direct operating cost, there we saw a lower cost base, so -8%. This was driven by our lower staff costs, lower energy costs, where we saw efficiency on our RTG and trucks, and a lower M&R cost. If we then look at our other operating costs, SG&A and other income, there we saw a significant increase, and this is actually related to our general cargo performance. So we were more profitable on the general cargo, and so we had to pay more royalty fees to the government. So overall, that's also a good performance. So we saw the net profit increased by 42%, almost 1 million Omani Riyal for the first 6 months of the year.
Next.
We then move to the next page. So on the first table, you see our balance sheet performance. So we managed to increase the strength of our balance sheet. In our current assets, we included all our deposits, short and long term, because we can convert them into cash in relatively short term. So a very strong balance sheet. If we then look at the margins, as I mentioned before, we have managed to increase all our margins from gross profit, operational profit, and net profit. And this was also partly driven by the cost control programs we implemented this year into the terminal. So overall, a very healthy performance for the first 6 months of the year. Thank you, Mohammed.
Thank you, Bart. So what's that? Okay, back to any questions? Do we have any? Okay. Now back to you guys.
Hello.
Yes.
Hi. Good morning. Good afternoon, team. This is Bishan Bhalla from Vision Capital.
Okay.
Thank you for the presentation.
We have some echoes. Can someone like put like a mute, because we have some echoes?
Yeah. Okay. Is it better now?
Okay, go ahead.
Yeah. Okay. Just had a few questions. One is with regards to you currently undergoing an upgrade which will last till Q1 25. Is that correct?
Yes, correct. In Q1
Correct.
25, we want to.
Yes. So now for let's say 2024, because we're already halfway through 23, but let's say for 2024, what sort of revenue guidance could you give, as well as once the upgrade is completed, your revenue guidance for 25 and 26? So I'm just trying to see, without the sort of current capacity on board, what revenues the company can achieve, and once the upgrade is completed, what sort of revenue the company can achieve.
Yeah. So the upgrade started begin this year and will continue in full next year. So the revenue guidance will be similar as 23, continued performance. And then beginning of the year 25, we will see an increased capacity, right? So increased volumes. So there we will increase our volumes with, I believe, where we get the capacity of 3.9 million moves. So that's a significant increase. And we believe we are currently with our customers, discussing with our customer how much they will use out of the capacity. We currently haven't shared a guidance on 25, but we can follow up with you privately. Yeah.
Sure, understood. And another thing is with regards to sort of margins, sort of what kind of margin expansion do you see once this upgrade is over? I'm just trying to see what financial impact this upgrade will have on sort of your numbers going forward from a financial analysis point of view.
Yeah. We're currently discussing the concession extension, and that has a major impact. And let me quickly explain it to you. We had to upgrade the terminal because our customers need the additional capacity, they need the additional capabilities to handle the biggest container vessels, right? However, our concession is expiring in 2028. So we're investing in the terminal to maintain our customer base. Otherwise, we will lose our container customers. So financially, we will not necessarily be better off than yesterday, right? But we had to do it to keep our customer. Once we get the concession extension in, of course, then you're looking also to a different scenario. Does this answer your question?
Sure. Thanks for that, Bart. And in terms of the extension post 2028, what is the duration of extension looking at? And if you are granted the extension, what would be the company's strategy to then sort of be able to monetize or to then capitalize on sort of this upgrade that you're doing? Because you very clearly said this is to maintain your customer base. So there's no value add. In fact, it's to avoid a loss of customers. Yes.
Exactly. So we're leasing the cranes, which is probably not the best option, right? Normally you would buy the cranes, but our concession expiring in 28, so we managed to find somebody where we could lease the cranes. In terms of civil upgrade, we're investing heavily in our civil, right? And the value beyond 28 is nothing, so we have to depreciate it very rapidly, unless we get the concession extension, right? So then you look at a different scenario where you can opt for a more efficient approach on your equipment, buying it instead of leasing it. And also your civil infrastructure, right? Does have to be depreciated within, the next 4 years, 5 years, yeah.
And with regards to sort of extension, what would be the, let's say, estimated duration of extension if you were to get one?
I think a normal extension, right, would be, and Iman.
Yes, this is item that is being negotiated with the government. So it's still too early to. Yes, we can hear you.
Yeah, for the duration of the concession we are still negotiating with the government. We don't know. We don't have an answer for that now.
Yeah,
we might have an answer.
Exactly. So
maybe
I cannot
at
highlight.
The end of this year, we will have an answer for that.
Yeah, but in general, right, you look at the long-term extension, because in the port world, right, you invest heavily in your equipment and in your infrastructure, and you need a return on investment. So the normal duration is significant, right?
Any other questions? Mona Subhi, Talal.
Thank you, Muhammad. All is clear.
Okay. Bishan, do you have any other question? He's leaving. Okay. Thank you all guys for attending this, and we hope to see you in our next discussion session beginning of next year, inshallah. Thank you all.
Thank you.
Thank you.